what's up? This is Sunny Fonseca. Welcome to my podcast. I have Kevin here today. How are you?
Good. How are you?
I'm good. Thank you for asking. We're going to be talking about investment loan products that are out there. It's a good product, and Kevin has some questions that he wanted to address, and it's out there for the consumer. So what's going on? Welcome to Mortgages with Sunny.
Thank you. Glad to be back another week.
Right?
So I guess what I wanted to talk about today was investing and the different programs that you can offer as far as real estate investors go. So I know there's 3 types of main programs for these investors. Can you get into what those 3 types are?
Yeah, excellent. So there's a lot of investors, young investors, or people who just want to get into investing, and their automatic response is, well, I need cash, or I need a huge down payment, or I need more things, Technically, the leniency of the loan products that have been out there recently have been very lenient for investors, right? So we have this one great loan product that just launched, I want to say last mid-year, and it's called the DSCR loan, okay? And what happens is with that particular loan product is there's no income requirement on it. Okay. So for example, if you see a house and you're like, well, Sunny, I really love this house. I want to get into this house, but I don't know how to go about it. I don't have the income. I don't file the tax returns that I'm supposed to qualify for this. So that's okay. So what happens is if you go in and you find a townhome or a single family home, you can use the rental income from that property, even if it's vacant, to qualify for the loan. So let's say your monthly mortgage payment comes out to be $3,200, but your rent will be $3,300. You can qualify for this loan. There's no income requirement on this. However, there is a down payment that's required between 20 to 25%, and the rate is typically higher on that. But what happens is it's an easy product to get into, and you can always refinance in the future to get into a standard conventional loan product.
Got it. So that's the DSCR.
DSCR, it's a very popular product that's been out there recently. A lot of investors have been utilizing it because it's simple, it's in and it's out, no income.
What about closing costs on that?
Yeah, great question. So closing costs, typically there are points for this particular loan product. Now the points vary depending on your mortgage representative or your credit score as well. You can also buy the rate down with that. That would be part of closing costs. So closing costs on this type of loan product can be between 4 to 5% of closing costs. Yes, it is a huge chunk, but it's good for you to get your property and always refinance and save for the future.
Okay. And who would you say, did you say like beginners or people who are just getting into investing, this is a good program for, or would you say it like doesn't really matter?
No, it does matter. If you have a history of having a previous home that you've invested or a renter, this is the type of loan product. Maybe if this is your second investment or your third investment, this is a great product for you to get into. You do have to have a history of rental as being a landlord, at least 1 year of it, and then this can be utilized for any investors, second-time investors.
Got it. So this isn't really a program for people who are just looking to get into investing.
Correct.
Okay.
Yeah.
What would be the next program? I think it's the bank statement only program.
Yeah. So that's another great product, right? Bank statement only loan program. So for example, somebody that does not file their taxes as a self-employed client and they can't meet the income requirement to purchase an investment home. So what happens is lenders have launched this bank statement only loan product where it goes by the deposits that you have into your bank account and they use that as your income. Okay. So yes, again, the minimum down payment requirement for that loan product is 15%. The rate is typically a little bit higher as well. But again, this is something for you to get your foot in the door, turn around, get your ducks in a row on your taxes, and refinance to a standard conventional loan. Okay. This can be used as a primary home or an investment status.
Got it. So would this be more for the person who's just looking to get into investing?
Okay. Yeah. So somebody such as yourself, is looking to purchase an investment property, this is the type of loan product you would get into. If you're self-employed and your income doesn't qualify for it and you have the money coming into your bank account, we would use that as income, and it can be utilized as an investment loan product as a first-time investor.
Okay, and what are closing costs look like on that type of
So typically the closing costs, this would be kind of the same. So you want to range between 4 to 5% on these type of, this is called a non-QM loan product, which is a non-traditional loan product. Lenders have made these type of loan products for somebody who does not file the income requirement or whatever the case may be. So there are points for this, and it can range. You want to estimate closing costs, which includes taxes, insurance, points, anything like that. You want to range between 4 to 5% on that.
Got it.
Of the purchase price of the home.
Right.
Yeah.
And then the no income, no docs program.
Yeah. So no income, no docs. That's kind of similar to the DSCR loan product. Now this particular loan product, you don't want to show no income, nothing. This does require at least a 30% down payment. Okay. Somebody that has no income coming in, somebody that who has assets, if they have $2 million sitting in a bank account or even $200,000, they can qualify for this type of loan product. It does have a credit requirement. You want to have at least a 700 or above on these type of loan products. And this is literally no income, no docs. So we don't ask for income. However, the property, you have to have certain amount of reserves in place, at least 12 to 15 months of reserves to accommodate for that monthly mortgage payment. Gotcha. So if your monthly mortgage payment is $3,000, you want to have 12 to 15 months of that $3,000 in your bank account to qualify for this loan product.
Got it. So like you said, if somebody's got $2 million sitting somewhere in a bank account, then they can show that and get approved for as long as they have the 30% down payment. And are closing costs the same or similar on that? Similar
as well. There, you want to range an estimate between 4 to 5% of the purchase price of the home for closing costs on that type of loan product.
So is that 4 to 5%, is that pretty standard for investment programs, would you say?
Not really. This is pretty standard for a non-traditional loan product.
Gotcha.
Okay, so these type of loan products, as I mentioned, are made by lenders who don't have a traditional income, who don't qualify for that, who are kind of out of the traditional status, right?
Right.
So on this particular loan product, you always want to range between 4 to 5% of the purchase price of the home. Then we have our traditional conventional loan product, right? Now, traditional conventional loan product is a standard if you qualify with your W-2 income, great credit. Minimum down payment is 20% on an investment, and the closing costs on that can range between 3% of the purchase price of the home, right? That's a traditional conventional loan, okay? Right. Now, a lot of people do get into that if they qualify for it, but unfortunately, business owners and stuff like that, they file taxes differently.
Yeah.
So that's where the non-QM loan products come into place.
Gotcha.
Yeah.
Okay.
There's a lot of loan products that are out there, but the consumer does have to understand that it's not going to be cookie cutter. And what I mean by that is you're not going to get that beautiful rate in today's market like what they are now on that type of loan product. Mm-hmm. And yes, there are closing costs. There is a higher down payment, but then we come to a situation, yes, I can get you a loan product for an investment, right? But if you don't file the income that you're supposed to, then yes, it's going to come with that type of scenario.
Right.
And you can always refinance in the future, but get your property, start your business, start doing your investments and start building your portfolio, And I was reading an article today, actually it was a couple of weeks ago, where Wall Street is buying properties now, right? Mm. They're not even dealing with the stock market anymore, right? So it's like they've bought all these properties. What does that say for us and the consumer, right? They're going to be our landlords.
Yeah.
Right? So utilize that. Get out there. Go get your property, because whether it's an investment, second home, primary home, get it. Because if not, Wall Street's coming right in and we're going to have no place to invest on that, right? So it's very important. Yes, it is cost efficient in the beginning, but in the long run, there is light at the end of the tunnel. You can always refinance once you get your ducks in a row.
Yeah, definitely. It's like, for me, it seems like it's all about knowing what to do, like knowing what the steps are. I think the more you know when it comes to even just purchasing a home, the better.
Yeah.
Because, just going over these different scenarios and things with you every week, it's like, you learn something different, and you learn, different, things that people do and how they, look to purchase. And there's so many products that people don't even know about that are out there. So
Yeah. And like I say, an average nowadays, statistics show an average newlywed couple or a married couple, or, yeah, they live in a house for 5 to 7 years. Before, back in the days, your first home, you would live in there for 10 to 15 years, right? Mm-hmm. Now it's changed to 5 to 7 years, right? So you only have to live in your home for 1 year before you can move out and qualify for another primary home, conventional or FHA. Go out there. Don't be picky with it. Go out there, get your property, your townhome, whatever it is that you want to get into, your FHA loan, utilize it. And a year from now, you can rent it out and buy another one.
Yeah.
So yes, build your portfolio, build your success by investing in real estate. It is so important. There's so many products out there, but you definitely got to take a risk.
Yeah.
It's funny because in banking, when I was in banking, somebody told me, average people are scared to take risk and rich people manage risk. It's like, just take it and go for it,
Yeah.
I have clients that call me and they're like, well, do you think it's a good decision? I'm like, I'm a risk taker. I would tell you yes. Don't ask me. So it's like, just do it. Yes, it's a lot more down payment. It's a lot more high rate, but just do it.
Yeah. What is it that they say? You got to risk it to get the biscuit?
Yeah. I had never heard that one. Risk it.
Like I don't know.
Leave it up to Kevin to go ahead and come up with that one. That's awesome. Risk it. And then, what was it?
You got to risk it to get the biscuit.
Yeah. It's true. Your money. So it's definitely utilize it. There's a lot of loan products out there to take into consideration,
Yeah.
I have a friend, you know who you are. And I always tell him, I'm like, listen, get your money and take it and flipping these properties. I was like, I know you got it. Yes, the rate's going to be higher. I know it's tedious, but get into it. He already has 2 properties that he owns, and now he's trying to get out there out of state. I'm like, do it. Go take risk. He has no commitments. I'm like, just go for it,
Yeah.
So I always bump heads with him sometimes, but and now I'm proud of him. He's actually went ahead and took into consideration. He has like 4 to 5 properties.
Nice.
So I'm happy for him, but there's definitely programs out there.
Yeah. Well, I think that my last question, I think you already answered it. I was going to be just any advice that you have to, people who are looking to get into investing, and I think that was great advice, is just, take the risk, and like you said, you can always refinance at a later date if that's the concern. The rate is the concern. Just, make sure you get the property now. And it's the one thing that I know that over my lifetime I've only seen go up in price. Always. Gas I've seen go up and down. Homes I've only seen go up.
Yeah, especially where we live. We're so overly populated that there is no room. Yeah. But don't be intimidated to take it out in another city, up north, Tallahassee, Jacksonville, where don't be intimidated by that. Go out there, because eventually what's there? Colleges, right? Mm-hmm. Who's going to rent it out? College students. Goes back to the same thing about having your kid into college, right?
Yeah.
Go sign for their property in Tallahassee or Jacksonville, wherever they decide to go to college, and take advantage of that. Leave that for them.
Right.
So don't be intimidated to seek outside. It's crazy, because I was talking to a client yesterday, and she calls me all the time. And she goes, hey, I want to thank you so much because I closed on her son's home in Tallahassee. This kid lived in this house for 1 year, decides to rent it out. There's 4 bedrooms in there. He rents out 4 each bedroom to college students. Mm-hmm. Profits about $2,700 in addition to paying out his mortgage from that.
Wow.
And he's now buying a bigger home in Tallahassee.
Nice.
He lived in it for 1 year.
Yeah.
Again, the parents did right. They helped him get a home in Tallahassee. Who lives in Tallahassee, right? You're like, who's going to go to Tallahassee, right? But guess what? He's just making money off of that right now.
Yeah.
Now he uses that income to qualify and get another property, whether it's an investment, primary home, whatever. And he's on a roll, and the kid's only 27.
Wow.
So I'm telling you where you could do it.
Yeah.
Be a risk taker. You're young. You got nothing to lose.
Yeah.
Like all this artificial intelligence stuff, I don't understand it. I really don't. I don't get it.
Soon we'll be able to just pretend we live in houses.
You know what? I saw that. There is like a digital a city. You could buy property on the digital city.
Yeah, the metaverse, I think, or something like that.
Oh my God, that's so creepy.
Things are getting weird.
I know. No, thank you so much for always asking these questions. It's so important to educate the consumer out there. And guys, please go ahead. If you're worried about what your credit score is, or if you even qualify, it doesn't hurt to go ahead and contact a mortgage representative or myself to get pre-approved or see where you stand when it comes to numbers. You can always start preparing and kind of go from there. It may take some time, it may not, but it's there.
Yeah, definitely.
Yeah.
Thank you for answering these questions.
Thank you. Thank you so much for always being a part of my journey, and I appreciate you and asking these questions. Super important. Guys, if you want more information, please send me a DM. My link is in my bio on Instagram and or Facebook. Subscribe to my YouTube channel. Any questions that you may have that you'd want me to answer on my podcast, please send me a DM or send me a text message. Thank you for joining my podcast. This is Sunny Fonseca, and thank you, Kevin, for always joining my podcast. Have a good one.